It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast as we stream right around Australia with the latest conversations shaping today's property market, from Ballarat to the Gold Coast and Orange in New South Wales. If you're in one of those locations, great to have you with us this morning. It is a Thursday, July the 30th. If you're blowing out the candles, Arnold Schwarzenegger, almost 80, if you can believe that, 79 today. Kate Bush, probably most people listening won't know who Kate Bush is. She is turning 68. And Lisa Kudrow from Friends, she is turning 63. I see that it was on this day, all the way back to 1978, the world's first test tube baby, Louise Brown, was born. And if you are at the moment going through any IVF, good luck with that, because that is not easy. Right, now, according to PropTrack, softer market conditions are creating an opportunity for first home buyers, with fewer buyers competing and investor activity easing. Could this be the window that many have been waiting for before competition inevitably returns as confidence improves? I'm going to ask that to Veronica Morgan this morning from Good Deeds as we take you into Sydney. We were just talking, Veronica, saying about Kate Bush turning 68 off air. Probably most people, the younger generation, don't know who she is, but you've got a story that maybe people do know who she is.
I've heard this and I've actually seen footage of it. There's an annual festival where a bunch of people dress in red, a la AKA Kate Bush, Wuthering Heights, and run up a hill. I think that her popularity is reviving or being kept very much alive.
Fantastic. All right, that is Kate Bush celebrating her 68th birthday today. Now, this PropTrack report, Veronica, as I say, with fewer buyers competing and investor activity easing, could this be the window that many people have been waiting for? What do you think?
Well, I've been in real estate now for 26 years, and every time there's a window of opportunity, everybody predominantly sits on their hands and doesn't take advantage of it. So yes, there's a window of opportunity, but it's a little bit more complex than that, particularly for first home buyers. As you probably remember, I've got a course for first home buyers. We have a lot of people in our mentoring program, and it's interesting how the confidence goes out of the market when prices start falling. And it's what everyone complains about when prices are rising. They just want a break. They want prices to fall. But when prices fall, they go, oh, I don't want to buy now. I want to wait. And so trying to get people to have the confidence to act when the opportunities are there, that is always an interesting challenge. It's just human behaviour at its finest.
It is that greed factor, isn't it? Because recent loan application data does suggest that many buyers, as you say, they are just sitting on the sidelines following interest rate rises and tax changes. But does the lower competition actually place buyers in the stronger negotiation position, particularly for homes priced well below the premium end of the market? Human nature in all of this is the let's just wait a little bit longer. And that is what you're talking about. That is the hardest probably piece in a softer market to educate people on.
Particularly with first home buyers, because, you know, in Australia, a lot are taking advantage of the 5% deposit scheme. And so that means that the needle doesn't have to move far for them to go into negative equity. So they're sort of thinking, well, God, you know, if I buy with only a 5% deposit plus paying costs, you know, I could end up with owing the bank more money than the property's worth. That's very real risk. And people it doesn't make you feel good. You buy a property and it goes backwards in value. So it's a difficult one to get over. I tell you, the type of buyer, though, that in an advantage or particular advantage other than first home buyers in a falling market are the upgraders. Assuming all things are equal, you sell a property, you might take a bit of a hit, and the property you buy or you upgrade to presumably takes a bigger hit. That's sort of a little bit theoretical, but it does play out in many cases. And so the transaction cost is smaller than it would be in a rising market, but people don't feel as good about selling their property for less than they might have potentially got it for it previously. So that's a difficult one. But at the same time, discretionary sellers sellers stop listing their properties. So what we find as buyer's agents, always remarkable that in a buyer's market, when we should be in the box seat and be able to get whatever deals we want, yeehaw, but it doesn't work that way because not every vendor is prepared to bring their property to market under these conditions. They will wait too. So if the buyers are waiting, the vendors are waiting, we end up in a bit of a standoff.
Yeah, we're not in that yeehaw moment at the moment as far as the Sydney auction property market is concerned, because that remains extremely under pressure with clearance rates, sitting well below 50%. And a growing number of properties being withdrawn before the auction actually eventuates. What do you think about the Sydney auction market? Obviously, you're trading in this space. Do you think that this is the beginning of a even more cautious phase in the market?
Well, look, I've seen this happen numerous times in my career. When the market cops a few shocks, as we have done, compounded, we've had a number of shocks this year, but also then we had the budget. So that seems to have taken the wind out of everybody's sails. We go through this period of, it's a hiatus, if you like, or it's a situation where not much happens. So clearance rates will fall. That exacerbates the problem because, of course, anybody who's wanting to sell thinks, well, I'm not going to put my property on the market. So you've got less properties to look at. Anyone who's going to buy thinks, oh, it's going to fall more, so I should wait and actually buy at the bottom. And so you've got all this sort of complete inactivity and that just feeds more negativity. But there always comes a point where people just seem to collectively say, I'm going to get on with my life. I have to get on with my life. I still need to buy a home. I still need to upgrade. I still need to downsize. I still need to move states for a job or whatever it is that is driving them. I'm still getting divorced. Whatever is driving the need to change properties, that will still happen. Life doesn't actually stop because the property market it goes into a down cycle. We just wait for life to get in the way and things will start moving again.
We often talk about this two-speed market in Sydney. Coming back to the whole auction market, I think Sydney's prestige suburbs, they're experiencing the greatest price pressure at the moment. And then you look at the more affordable market, suburbs, etc., there seems to be this widening gap between the two. How are you sort of looking and interpreting that?
Yeah, we're seeing that. And certainly when I talk to a lot of sales agents as well, there's certain price brackets where they are really struggling to find buyers. That lack of confidence has really hit the upper end quite remarkably. But the upper end is much more volatile anyway. It will have greater acceleration in prices and greater falling in prices. And that's just the way it always is. The upper end of the market, weirdly enough, is not as interest rate sensitive as lower price brackets, but they are sensitive to other things, so certainly what's happening in the stock market, what's happening potentially in crypto, I don't know. Yes, we are seeing that definite difference. And certainly across the whole country, as we saw the end of last year when the government extended the 5% deposit scheme for first home buyers before the budget changes that took out investors in that lower price bracket, in every capital city, the lower quartile prices was growing at a much greater rate, or in the case of Sydney and Melbourne was actually growing, whereas the rest was in decline. We certainly have seen quite a significant difference between the lower quartile and the upper quartile.
We are talking to Veronica Morgan in Sydney this morning. When we come back, we're going to just highlight the fact of just how expensive land is in Sydney with a garage sale. We'll take a look at that after this.
If you're confused about the property market, don't be. Unlock and educate yourself with the latest trending analysis and interviews. Decode the property market with insider knowledge and insights to better navigate your real estate journey.
It is a Real Estate Thursday. Veronica is with us. Yes, the Sydney land situation is extremely valuable, especially in Sydney's premium suburbs. PropTrack reported on this garage sale. But the garage really isn't the main attraction here. It's the development potential. I think a lot of people, Veronica, may have been asleep at the wheel a few years ago around these types of properties, but not anymore, clearly.
You're talking about the property in Balgala, and Balgala is a lower Northern Beaches suburb, if you can call it that, just near Manly. And yeah, there's not a lot of vacant blocks in Balgala. So a garage on a 300 plus square metre block of land is the next best thing, really. You can build your dream home on that quite easily, a nice level block. In fact, I looked at the images and the lawn. I have to say, I don't think I've seen such a nice lawn with a garage ever.
Yeah. How are you sort of finding the inquiries in terms of people saying, look, I'm looking for something to develop which is a smaller plot? Do you have much requesting for that?
When you say a smaller plot, that depends where it's located, right? That's actually a sort of a pretty normal block of land in a lot of suburbs, that size. In other suburbs, it's large. In other suburbs, it's tiny. We do find that there are a number of people that would be very, very happy to build their own home from scratch. And so if they can buy a property that is not in a conservation area or heritage with a heritage overlay where they can do CDC or certified development, there's a definite an uptake, especially if they can go to a project builder and get a package deal, if you like. So to simplify it, I think the cost of building and the variability, I guess, in terms of the cost, the end cost of building with materials and also labour costs going up as they have done ever since COVID, has made it very risky for people wanting to build or to renovate. So wherever they contain the costs, if they can get themselves a nice new home to their taste in an infill area, in a sort of a highly demanded area, then there is a lot of appeal around that.
Do you find that you've got the odd client that is trying to get fixed building costs, and a lot of these builders, they won't sort of go down that pathway these days because, as you rightly say, you know, the cost of building, it has been escalating over the last 5 years.
Most of our clients these days aren't that interested in renovating, and for exactly those reasons. And so there is a bit of a premium that they are prepared to pay for a property that has been completed and renovated, particularly if it's done to a high standard. And so we aren't really having those conversations with clients of recent times. However, we are very aware that, you know, the risk of that, the fact that builders are not necessarily wanting to lock themselves in to those contracts, and also the difficulty around getting finance for those, or construction finance for those sorts of builds, that is one of the things that is stopping a lot of buyers from trying to go down that path.
In this current market, how are you finding, you know, negotiating with the vendors or the real estate agents? Of course, you know, go back 5 years ago, it was a completely different playing field. How much of the chasing you at the moment by these agents saying, oh, Veronica, I've got one here. Oh, here's another one for you. That must be a lot more happening these days than what it was.
That's how we know the market's about to turn. We knew that agents were seeing a lot less attention from buyers some months ago, when all of a sudden, you know, our email feeds are lighting up and our phones lighting up with agents proactively offering us access to properties. You know, do you have a buyer for this? Whereas we've been chasing them actively for a number of years. So yeah, that tide has turned. They're struggling to get listings as well. So often they will talk to us about properties where they've been speaking to the owners. The owners aren't necessarily willing to commit to putting their property on the market currently, which is fair enough. We do a lot of vendor advocacy as well, and we have very good conversations with our potential vendors around how motivated are you to sell right now? What are your real reasons for selling now? And how ready are you to meet the market should the market not deliver what you're hoping for? And these are really important questions to have with owners before they put their property on the market. But a lot of agents are out there trying to convince owners to go on the market because, of course, their volumes are down and they're hurting financially. And they will be talking to us, and no doubt other buyers agents, around these quality listings often that they're potentially getting. And they're wanting to work out if we can introduce some buyers beforehand and maybe negotiate a deal before going to market. So our opportunities in terms of off markets definitely changes under these circumstances. And it's a good opportunity for us to work relationships, our long-standing relationships with agents in the areas in which we are specialists.
Good stuff, Veronica. Thanks for coming on to the Real Estate Breakfast. I'll let you go and celebrate Kate Bush's birthday.
Great chatting. Thanks, Craig.
We connect you to the best real estate information across Australia. The Real Estate Podcast.